Hello there, and welcome to this section of the capital presentation where we're going to be doing a financial analysis for the capital condos. A bit about myself: my name is Randy McDonald. I'm the president of Heresy Condo Marketing. We're specialists in investor-focused condo email marketing solutions. We've done over 40 pre-construction projects in Southern Ontario since 2008. We've published over 900 real estate articles online since 2009. HeresyEmail.com is our website. A bit about the Kingston's Capital Condos developer, Innate Developments. They are a condo and townhouse specialist with 20 years experience developing in undersupplied areas outside the Greater Toronto Area, including Waterloo and Kingston. InnateDevelopments.ca. There is the future Capitol building in downtown Kingston. So there are 5 sections to the overall presentation, 5 separate videos really. And this is the 4th of them on financial analysis for the capital condos. The other ones are maximizing condo investment profitability in general. Second is on Ontario's undersupplied condo markets, which is a 2-part video. First part is on Waterloo, second on downtown Kingston. The third video is on Ontario's best and worst condo markets. And the 5th is accelerate your condo portfolio's growth with refinancing. The first and 3rd and 5th videos are definitely videos you want to watch for general knowledge about condo investing, and if you are interested in the capital, you definitely want to watch part 2 on downtown Kingston, and of course the video you're watching right now. So let's dive in and talk about the financial analysis for the capital condos. So presentation overview. So we're going to be doing a long-term analysis of the capital condo investment during both the pre-construction and post-construction periods. Okay, so that you understand the money that there's to be made before the building is built and after the building is built, having a tenant and owning it as an income property long term. Okay, so pre-construction, we're talking about the 2-year period from 2016 to 2018 when the investor owns the capital condo, and this is before the construction is completed, closing, and the tenant moving in. And then post-construction, analyzing the long-term buy and hold investing strategy for capital condos, basically having a tenant and the tenant paying the mortgage long-term. We're also going to talk about the capital's 3 incomes with the buy and hold strategy, specifically what you can expect and what we forecast for the operating income, in other words the monthly income from the rental revenue, the equity growth as the mortgage is paid down, and also the capital appreciation, the total net worth of the property over time as it increases overall in value. And really, capital appreciation is very important, so it's the largest profit with income properties by far, as you'll see with our analysis. Let's talk about the pre-construction phase between 2016 and 2018. So the capital's estimated completion is in fall of 2018, so buying today means you get 2 years of capital appreciation during the construction phase without any mortgage interest costs, and so this is actually a highly profitable period. What we've calculated is that from 2005 to 2015, Kingston's average annual property appreciation rate for all property types was 5.47%, according to the Canadian Real Estate Association. Okay, so what we've done is we've factored that in for what this looks like for the 1, 2, and 3 bedroom rooms, and so there you see the original sale price, and here you also see what it would look like a year after for each of those, in 2 years at 2018. Based on this down payment, and this is your total capital appreciation during that time, and this is your total return on your 20% down payment. Okay. So let's talk about the post-construction phase from 2018 onward. So the long-term buy and hold strategy is by far the best condo investment plan for any building in any area. Okay, it's got the least risk, it's the most profitable, and the biggest thing is that this is something that's really underutilized by investors, is that it gives you amazing leverage, and that's the whole power of real estate, is leverage, being able to buy on a multiple of your money. So basically, you can periodically buy additional investment properties solely with your condo's built-up equity via refinancing. Very important concept, refinancing. Okay. So if you want to learn more about that, I really encourage you to watch this separate video we've got, Accelerate Your Condo Portfolio's Growth with Refinancing. Really just shows you how to do more with what you've already got. So let's do an example for our financial analysis. That's what we're looking at in terms of numbers. So we're looking at the 1-bedroom unit at $239,900. There's your square footage, price per square foot, and your condo fees. And that is also at $1,350. That is your guaranteed monthly rental revenue. So that is the guaranteed rate for the first year that Innate Developments is offering investors. And so here are the mortgage details. One thing is, feel free, I'm going to kind of go quickly in some of these slides, but feel free to just pause this video at any time if you want to spend more time analyzing any of these numbers. Basically we're looking at a 30-year mortgage at 2.5% interest rate. So here are the three sources of income with buy and hold: operating income, equity growth, and capital appreciation. So let's deal with each of them one by one, starting with operating income. Okay. So this is the 30-year plan. Again, feel free to pause this, and you can read all the assumptions below. But basically, this is a 30-year plan. As much as we've tried to forecast this as possible conservatively. And so this is what we're looking at for each in 5-year increments. So you see here, year 1, year 5, year 10, and so forth. And this is, for now, this is what I want you to focus on. Your net operating income. That's basically how much your profit is per year for the property in each of these years, and this is your total accumulated net income, operating income. So just at the end of this all, this is what you're looking at, close to $300,000 in operating income over a 30-year period. Okay, so this is what it looks like just year by year, the same analysis. Again, coming out to close to $300,000 for the end of these 30 years in the profit from your rental income. Okay, so now I want you to compare this to a property that we've analyzed in the Maximizing Condo Investment Profitability Value, where we're showing the difference between this cash flow in Kingston versus one in what you could expect in Toronto. And notice how much here, where my cursor is, how much less the cash flow is at the end of 30 years. And actually, this is just one of the scenarios, a likely scenario at $1,700 a month. And this is what it would actually look like, and how many years of negative you would have. Okay, so really big can be a big difference in cash flow over the years. Okay, with comparing Toronto to Kingston for various reasons, condo fees, and so forth. Here's another scenario that you can consider as an option if you have the cash on hand to do it. Rather than putting down the bare minimum, 20, 25%, depending on what your bank, your financial situation, putting down extra 35% total down payment instead of 20. What that ultimately comes out to is an extra close to $36,000 on extra down payment on your one-bedroom unit. But what that translates to is the following: you get better cash flow. So you have a lower monthly mortgage payment, and that earns you an additional $75,000 a year, or sorry, total over the 30 years, and you're paying less interest on the mortgage. Okay, and an extra $15,000 saved. Okay, so by putting down this amount, 35, close to 36, you're ultimately profiting an extra $90,000. Okay, so something to consider. The other thing is that it puts you in a better position for refinancing. To use this condo's equity. When you have more skin in the game, when you have more down payment, you're able to refinance more favorably with your bank, and this can just help you. So it can be a really good start. If this is your first condo, it can be a really good start to building your portfolio over time with refinancing. And again, you want to watch this video to understand how that's done. It's really a great plan for how to build real estate wealth long term, starting with your first condo. Let's talk about equity growth. Okay, so this is taking a look at the one-bedroom suite, basically based upon in 5-year increments, and showing what your mortgage looks like at the end of these various years, and also what your principal pay down looks like over the years, and your total accumulated equity. Okay, so this is just equity that is accumulated by paying off the mortgage. Okay, so you can see there's what you look at the end of 30 years in 5-year increments. Okay, and there's all the mortgage information on the side there. And so this is something as well that, regardless of what happens with the with the cash flow, or its projections and the capital appreciation, this is really rock solid. Okay, assuming that the mortgage rate stays that same, this is money that you will be accumulating. One thing I've heard say is that regardless of what happens with the capital appreciation, at the end of the mortgage, when you've paid it all off, the worst case scenario is you own the property, okay, whatever it's worth. And so this is the equity that you would have bare minimum in the property once the property is paid off in any case. Okay, certainly it will go up in value, but this is really rock solid what your equity is, okay, based on paying the mortgage down. And just a bit of a note for this analysis, the interest rate and the monthly payment amount remains constant throughout the 30-year term. So the reality is, yes, interest rates could go up over time, increasing your monthly mortgage payment, interest fees, and then lowering the amount paid off your mortgage annually. But in any case, for this analysis, your condo's annual 3.7% rental increases that we've factored in will cover any future higher mortgage payments. Okay, so that's how we determine, that's how we account for any possible growth in your interest rate. Okay. Now let's talk about capital appreciation. Okay, so again, this is just looking at it from the pre-construction phase. So there again is your table and what you're looking at between 2016 and 2018. And then here's what things look like after your pre-construction, after the property is built and someone moves in. Okay, so we're looking at, what we're looking at here is this number here, 5.47. That is the average property appreciation rate for the past 10 years in the Kingston area. Okay, so using that as a number, as a constant for the next 30 years, we've used this to forecast under that scenario what your capital appreciation could look like over time, or would look like over time rather. Okay, so here now it could be years where it is more than that, it could be less than that. We're just saying that as an average. If you want to look over here and consider that this is the difference between 5.47% and just a little bit more than 1% higher at 6.5%, you can see how much of a difference it makes between the capital appreciation here and here. Okay, so this is in 5-year increments. This is what it looks like over a 3-year period in yearly increments, okay, to get a sense. So this is the column that you want to see. This is your market value as you go up. Okay, so it's really important to see the long-term picture to understand what the property will look like in years later, so that you get it, the value of investing sooner rather than later. And again, it's based on 5.47, 2005 to 2015's annual average capital appreciation rate in Kingston. And that's quite favorably comparable to the appreciation rate. And I'm just picking a single year for the past year in Toronto and GTA. The GTA's average for condos was 4.3%. Toronto, it was 6.0%. Okay, so certainly favorably comparing Kingston to either Toronto or the GTA. Okay, so here's where it all comes together. Here's what we've done is we've compared the property based upon the 3 income sources. Okay, so we're taking the total net operating income, where my mark cursor is. Okay, so that is your monthly income from rental revenue. The second is your equity growth from paying your mortgage down, and then the third is your capital appreciation. Okay, so if you look at it in year increments, year 1, year 5, year 10, here's what your total position looks like. Okay, so here's year 1 right here. That's what your position looks like total. Here's year 5, year 10, and so on and so forth. Okay, and so ultimately, based on this forecast and the projection numbers that we've used, that's the value of the property after 30 years. Okay, now a real bottom line figure to understand the value of this investment over time is considering this number over a 30-year period on average. So if you take this number, this 1.36 million, and divide it by 30, okay, that's the number you get. Okay, so the one way of looking at it is that every property, if you buy this property, you're essentially adding $45,000 to your income every year for the next 30 years. Okay, so basically the idea is that if you own 2 of these properties, you're essentially adding over $90,000 a year to your income. 3 of them, you've got a 6-figure side income. Okay, and so that's one real interesting way of looking at it. It's especially if you own multiple properties, when you can look at it from that perspective, it gets pretty exciting. Okay, so really the bottom line, with the capital being the very first high-rise condo in the heart of downtown Kingston, investors can capitalize on the high demand in this very undersupplied emerging condo market. This demand, coupled with the capital's absolutely prime AAA location, bodes very well for your unit's long-term appreciation and your overall return on investment. So the next video you definitely want to watch is this Accelerate Your Condo Portfolio's Growth with Refinancing video. So what we're talking about here is really about what you can be doing with your investment as you go along to leverage your equity and basically get more properties out of it. Okay, so if you're interested in additional information, feel free to get in touch with me. Again, my name is Randy McDonald, and there is my contact information. And thanks for watching. Have a great day.